What is up, YouTube? Matt McKeever here with Kasey Wong again.
So we like to stick with what we're good at and what our core strengths are. My expertise is actually in apartment buildings. It's hotels is sexy.
Yeah.
Right? I'm not that sexy. I believe we can build up to 70 units, but I think we can probably get it up to about 100, and that's a downtown core on Broad Street. If it's a 70 unit, if it's a 100 unit, you're not going to sell it all at once. You're going to hold some back and then see where the market takes us and have that profit there. Again, that's not our specialty. Our specialty is actually buy and hold apartment buildings. The elderly people need some affordable housing, the single mothers. That's what we're going to be targeting. We're going to help these people. We want a core holding, something very safe over the long term, over 20, 30, 40, 50 years. You know what? If you're capable of doing it now, do it now.
What is up, YouTube? Matt McKeever here, and we're back with Kasey Wong in today's video. This is a video you guys have been asking for quite a while. What exactly is the business structure like of Kasey Wong's real estate empire? Well, in today's video, we're going to dive deep into exactly how he's currently restructuring it and even the logic behind it. So we're going to be discussing 3 different legal entities that Kasey's putting together to really allow him to scale up his real estate portfolio and move on to that next level. This is really exciting stuff. He's talking about building his own REIT, private equity fund. There's a lot going on here in today's video. Let's just dive right into it. But before we do so, make sure you smash that like button, hit the subscribe button if you're new to my channel, and let's chat with Kasey Wong. What is up, YouTube? Matt McKeever here with Kasey Wong again, and I'm really excited for today's video. We're going to kind of break down just the evolution of Kasey's business model. So this is something that I personally find fascinating because a lot of us, when we get into real estate investing, we're first starting off with getting that duplex or that fourplex. We maybe dream of someday getting into a 10 or a 20plex. But what happens after you've been doing a bunch of 20plexes or a bunch of 30 or 40 unit buildings? So Kasey's going to break down for us just kind of where his business is today and where it's going to go in the future.
For sure. So just a quick little update. I'll hit on sort of where we're going, business styles, and sort of the 3 pillars of what we're doing. So an update on the Stanley Deal in Niagara Falls, as well as Whitby and then St. Catharines. So the first one is the Stanley Deal, the Niagara Falls. That was a little motel on it. It's called Roadway Inn. We partnered up with Pro Funds. They're experts. They're a great company that essentially they've done hotel before. Okay, we haven't. So we like to stick with what we're good at and what our core strengths are. So they're going to be taking us out. We get a little bit of profit, and then we're going to stick with what we're good at. It will be essentially the apartment buildings. But yeah, reach out to them if that's something that what you want to hold. But we're always pivoting as business owners, as real estate sort of investors. We're going to try something, and if something doesn't take, it's not that it didn't take, it's just not our expertise. And you always want to focus on what you're good at. So if we have sort of our core holdings and we have our people, personnel in place, stick with that. Okay, so there's nothing wrong with going somewhere and then, hey, it's like my core holdings, my expertise is actually in apartment buildings. It's hotels is sexy. Right? I'm not that sexy. But when it comes down to it, I still like the apartment buildings. I like the long-term hold. I like the sort of, it's not that, the daily focus doesn't have to be there. I don't need so many people to man the front office, people moving in and out. The vacancy is there, up and down, the tourism, things like that. Like, there's nothing wrong with that. The return should be higher because there's more work involved.
It's a much more active business.
Yeah, exactly. It's a very active business. So that's what's happening with Stanley. Pro Funds and Valor Capital are the ones that's going to be buying us out. So reach out to them. For the Whitby, we're trying to increase the amount of units. I believe we can build up to 70 units, but I think we can probably get it up to about 100, and that's a downtown core on Broad Street. So Whitby's, the Durham region, is very growth oriented. The council of the city, the mayor, really want to push the development out, and Whitby's is a great location. It's probably only a 30-minute drive to the downtown core. You have GO train right there in Whitby. So there's a lot of growth in Whitby. So we're essentially, that's a build. We're going to build, and then we're going to sell. And obviously we offload it like slowly. You're not going to, if it's a 70 unit, if it's a 100 unit, you're not going to sell it all at once. You're going to hold some back and then see where the market takes us and have that profit there. Again, that's not our specialty. Our specialty is actually buy and hold apartment buildings. It's not glamorous in a way. It's not sexy. I'm not opening up. I'm not a condo builder, but it's a very, very stable asset. There's other, great commercial space, retail. It's just not for me. It's a little bit riskier. That beta, that risk factor is a little bit higher. Your return should be higher.
Yeah.
Okay. I like the stable asset. My investors like that. Sort of that growth. It's very, very steady. Okay, it doesn't really go up and down too much, and we just hold it for the long term. So their core holdings with us is probably more, right? It has to be more because it's a little bit more stable. If it's going to be like 30%, 50%, they're not going to invest. They shouldn't invest that much. If you're doing a development play in 5 hours from here, okay, in a small little town with 50 people, and you're going to be building whatever high-end house, and you're going to flip it for 2,000% increase, then your investor shouldn't be investing their life savings into that. Okay, so we want a core holding, something very safe over the long term, over 20, 30, 40, 50 years. Okay. The St. Catharines play is basically 40 units, and we're going to develop affordable housing in that. So we're reaching out to our developer or to our builder that has built over 1,000 units, and then we're going to have to. Unfortunately, we're going to jump through hurdles with the government, but it's not a conversion or anything like that. It's going to be a new build. We know the plan there, and then we can touch upon that as well. Okay. So again, business-wise, our core holdings will be apartment buildings, and then we sort of say, hey, you know what? People are reaching out to us. We actually turn a lot of people away for accredited investor, like that doesn't meet the accredited investor profile, and they want to invest, but how do they do it, right? So let's touch upon this.
Yeah.
So fund number one is apartment REIT. So it's open to the general public. It's not for the accredited investor. The accredited investor can probably jump into somewhere else. It's a 6% cash distribution. Overall return was about 8 to 12%, and that's our target. Cash distribution should be paid on a quarterly basis as well, but we'll confirm that. And it's a $10 million raise for our first year, so we're already raising money. We have a few larger, for all of these things, we do have investors that sort of fall into these different types of pillars within our business. So that's fund number one, is the apartment REIT. Fund number two is a housing development fund. And this is going to be only for accredited investors, and it's going to be the high net worth people. The housing development is that the government initiative wants to build more affordable housing. So the government's trying to do this and provide that money to developers like ourselves to develop and to rent out for the long term at a reasonable rate. So what this means is that you're building, let's say 100 units, 15% has to be at the affordable housing. And that's about, I'm not sure about the exact figure, I think it's probably about 20 or 25% below market value. But for the housing development fund, or the money provided from the government, it's quite substantial. So that actually makes up, if not more, for us as operators, that we can gain on that. The public gains on that because now, let's say the elderly people need some affordable housing, the single mothers. That's what we're going to be targeting. We're gonna help these people and make sure that the rent is affordable with good units that's being built. These are going to be new built buildings, and they're going to have, for example, if it's wheelchair accessible and so on and so forth, that we have to build according to those requirements and that criteria. Some of the initiative or some of the government sort of provisions and the exactly what the builds are, we're going to have to accommodate that, as well as some of the loan will be quite favorable to us. It's going to be a 50-year amortization at 1.5%, but they're going to be on the first loan. Nothing wrong with that. That's something that we'll probably buy and hold for the long term. We'll hold for about 10, 20 years until that elapses. But that's a very strong asset. If you're holding a mortgage for the entire build at 50-year AM at 1.5%, even if your rent is lower. So we do the calculation, we break it down. It's substantial, right? And if you can build it to their requirements, you do have to jump through hoops. It makes sense as a business option. Okay, so that's for accredited investors. The minimum investment is $500,000. So it's going to be for somebody that has, and the return is going to be quite good, but it's going to be the accredited investors that meets those standards, and the minimum investment is quite high at $500,000. So we're going to have to raise about $25 million, and a target return is 20% per year. So 20+%. Again, this is apartment building. I'm not saying that a lot of investors can probably beat our returns, right? But you have to understand that my investors or your investors should know that you're in real estate. Don't try to always say, hey, don't invest with Kasey or don't invest with this other person because my returns are better. Don't play that game, because now it's a risk reward, right? Make sure that don't try to promise, like overpromise. What is it? Overpromise, underdeliver? Or no?
Yeah, you want to do the opposite.
Do the opposite. So underpromise, overdeliver, right? But you want to make sure that you promise or you say that the return is attainable. Okay, It's not going to be way too high. Like, you're not going to say it's a 50% rate of return, and then at the end of the day, they're disappointed because you didn't reach 50%. And real estate shouldn't be like that. It's a core holding in anybody's portfolio. It's going to be something that's very, very stable. Okay, you're not playing around with returns and with people's lives. You're going to make sure that it's very, very stable for your investors, for your tenants, and for the building itself. Okay, you're not going to put anybody into danger. It's not going to be an illegal rooming house or anything like that. Make sure you just play by the rules. Okay, so that's really important. And I think your investors will understand and like it. Like they that's what they want. They want to know that the core holdings in their portfolio is stable. Okay, so that's fund number 2. Fund number 3 is fixed income fund, which is, again, open to the public. Essentially, people want that money on a regular basis. Actually, my mother sort of falls into this. Like, I promised my parents, like, they don't need a few $100,000 in the bank account. They want to go on vacation. They want to be able to relax. And then I will provide that to them. Because I can't just give them the 8 or 10%. I have kids, I have a family, I have bread to put on the table. But if my parents need that 8 to 10%, I'll give it to them. So they invest with me, but my parents, they come first. I make sure that they get the 8 to 10%. It's a $5 million to start, and we're just going to continue. So we're going to try to continue to push it up to $10 to about $20 million raise. So that's something that our business sort of evolves. You're going to evolve. You're going to go from the 2 unit to 4 units, and you're going to find that I'm at 60-something 100 unit houses. It's not doable for me, right? I'm running around crazy, dealing with a whole bunch of maintenance issues, showings, and whatever. It comes to the point where I might sell half of it, right? Take the capital gains, take the little hit, but now you're going to scale, right? And a lot of people will do that. They'll scale upwards and say, hey, okay, I'm going to buy one building. I'm going to get to that level and make sure that I can now manage it. And a lot of people will do that, and it's just a natural progression, right? Sometimes you're going to pivot. You're going to buy that 10 unit, and it's like, 10 unit is not really for me. I think a 20 unit is better. And then you're going to you can bring your investors with you, right? Your investors will see that, okay, well, I've done that. I've done the rent-to-owns, or I did the duplex or triplex. But there's nothing wrong with that. I'd rather you buy something that you're capable of doing instead of waiting, right? Some people on comments said that, what should I do? Should I buy that duplex now, or wait until I can actually raise more a year from now or 2 years from now and buy that 10-plex? You know what? If you're capable of doing it now, do it now.
Cashflow Tribe. Hey YouTube, have you checked out Cashflow Tribe yet? It doesn't matter whether you're an experienced, seasoned investor or brand new to the game. I can probably predict if you're currently not having the level of success you want as a real estate investor, it's due to one thing. That one thing is you're not making enough offers, plain and simple. You need to be making more offers as a real estate investor if you want to hit those big, audacious goals that you're setting for yourself. So here's the deal. Cashflow Tribe, that's the community that myself and Ben were making together. And so Ben's actually so busy trying to provide value to you guys that he had to take off there. But here's the deal. Cashflow Tribe is really a one-of-a-kind community focused on results. That's the difference between us and everyone else. We want want to get you guys those results. I'm tired of seeing people commenting on my YouTube channel for 2-3 years now, but they're not making offers. What's holding you back? I'm going to guess that it's either a lack of confidence or a lack of competence. And we cover both of those things in Cashflow Tribe. So here's what I'm going to do. I'm going to make you guys a 7-day free trial offer. You can join Cashflow Tribe completely free, get to test it out. If you like it, great, stay and pay. If you don't, well, I hope you at least find one great idea that you can take away and use to start making more offers, gain more deals, and finally start making the money related to real estate investing that's probably why you're watching my YouTube channel. So let's do this, guys. Let's make 2020 your year.
Cashflow Tribe.
Okay?
Yeah.
You can find an investor to take your money out and recycle your money for a 10-plex later, right? So you can hold a duplex, right? Stabilize it after 1 year, get an investor to buy in, get that fair market value, and then move, and then bang, you're into the next phase of the 10-plex, right? So there's always an evolution of your business. Your business is always going to be growing and going to the point where it's going to push your boundaries. So you're going to be going for that duplex, triplex, rent to own, and then you're going to have that 10-plex or 20-plex, right? So there's something that you as an owner, as a business owner, as a real estate investor, like just you're going to evolve. Just like Matt's business is maybe, well, it's YouTube at the beginning. Now he's doing training and education. That's great because a lot of people reach out to him, right? And to me, but reach out to him and say, I want to learn about more. So reach out to him. Like he does that. He's pivoting and he's doing more education now. That's great. And then he's still buying buying this core holdings, like let's say London, but that's what he's doing to build a certain type of business. Now he has probably, like Matt has holdings in real estate, now he has another type of education where he's, because there's a need there, right?
Yep.
I see a need here where people want to invest, and then I can raise money and then invest, and then my investors will have holdings for that as well, right? So again, there's nothing wrong with pivoting and taking a look at, hey, people reaching out to me because I'm an expert in rent-to-owns, or a certain location, maybe Barrie or Midland or whatever, and then they say, you know what, this person's an expert here, I'm gonna start, the public is gonna reach out, and then now you fill that void, because you know that there's a business out there, right? So again, take a look at what you can do. People will, if you're out there and you do those social media, people will say, hey, okay, well, I like what you do. Let me reach out to that person, and that person's going to sort of develop, like us, into what people want, right? But yeah, you're in this space where sometimes your business will actually just evolve. They will tell you where to go, right? So you just have to be open and say, okay, well, they're open and they're willing to pay me, right? Well, not necessarily me, to you, or pay somebody and say that, okay, now I want education, I want coaching, okay? I'm gonna go to Matt and get educated and get coached here, doing wholesaling with Ben,
Humble CEO, yeah.
Humble CEO. So he's really good at that. He's an expert at that. If I want to do that, I'll go with Ben, right? If the two Sarah, we talked about the two Sarahs there.
Yep.
Sarah Eder and Larby.
Yep.
So those people, those two investors are great at their certain niche. You're going to go to them and get educated there. Who's the other guy?
Kyle Ford's really popular as well.
Really popular, right? So you go to Kyle Ford and say, Kyle Ford's doing something in, I think, in Kitchener or something.
Yep.
So he's doing something there. You're going to reach out to Kyle Ford and get educated and get trained and get coached from him. There's another person, Mike Rosehart. Mike Rosehart, very smart, very upfront, and he has some bad rep. I have it too, right? But he's doing something really great. Reach out to him. Unfortunately, I don't coach, right? But reach out. I love his story, right? Mike Rose, you should follow that guy, right? Sorry, Matt, but like, I like to, like, he's doing something great. I watched like some of his YouTube stuff, and well-spoken, very charismatic, willing to train, right? Willing to be out there, willing to almost be like, whatever, like people on the public sort of space that people are giving him some bad rap, like this guy is, he's a go-getter.
Yeah, he's comfortable being polarizing.
Exactly. So Mike Rosehart, right? But yeah, definitely, these are the people that you want to follow, get trained. But you know what? These people will, I think he pivoted as well. So everybody will pivot. Everybody will have their businesses, and it's actually the public that's telling you where to go, right? So we're going here, so this is what we're doing, right? Matt's going somewhere else, and the Roseharts of the world, Mike Rosehart in particular, he's going somewhere as well. Follow him, okay? I don't even post. Dude, like on Instagram, I haven't even posted anything yet. But it comes to the point where you will find your way. Give it a try, right? I like to give this sort of like saying is that, hey, when we all die, okay? Either you're the Warren Buffetts, the Matt McKeevers, the Mike Rosehart, or the Kasey Wongs out there, we get to leave it all behind us, right? So just give it a try, right? All of this stuff, all of this, the money that we earn, okay? We actually do work. We worked hard, okay? I think that some people will spend in different ways, all right? But it comes to the point where you can't take it with you. Right? Absolutely. So, you know, enjoy it, work hard. You're gonna lose a little bit, you're gonna learn a little bit, right? But it comes to the point where we get to leave all of these profits behind us. Nobody can take it with us, okay? Your Sarah Eder, Larbies, and all these people that we mentioned, Kyle Ford's, like, you know what? They're doing great stuff, right? Piggyback off of them. You can learn from them. Hopefully you're learning from me, and then do your thing. Right? Just do your thing, and then people will tell you where to go.
I love it. So before we wrap up this video, Kasey, if people want to reach out to learn more about this.
Yes, invest@kakoli.com. So we have our chief investment officer. His name is Mark. So it's invest@kakoli.com. CACOELI.com. Just reach out to us. If you fall into one of these 3 pillars, let us know. But yeah, definitely we're working on the fund, the REIT, we're working on the housing development, and we're working on the lending, the fixed income fund as well. So definitely reach out to us. It only took us about a year. But yeah, definitely know where you're getting, like know your journey, okay? If you want to invest, great. If you want to do it yourself, great. But know what your goals are and just go and get it.
Awesome. Did you guys enjoy that video? If so, smash the like button, hit the subscribe button if you're new to my channel. If you guys want more Kasey Wong, check out this playlist right here, or don't like that playlist, check out this playlist with Kasey Wong. We've got all kinds of Kasey Wong on my YouTube channel. I know he's one of the most popular guests that we've had on, so we're going to continue to have Kasey as a reoccurring guest on my YouTube channel, so make sure you hit that notification bell if you haven't done so already.